Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within yesterday's range, and we've been seeing a lot of choppiness and high volatility moves in both directions. So given that the market is still trading within the recent multi-day range, our short-term bias is going to continue to be neutral, while the intermediate and bigger picture continue to be bearish. Now, the extra volatility and indecision that we've been seeing in the overnight session could be because it's the last day of the quarter. It's also Friday and the last day of the month. So given that context, I think it makes sense to be extra selective and careful on the trade setups that we consider taking today and be extra mindful of trade location. Because with our short-term bias being neutral, the market can really move in either direction. And until we get either a proper breakout above 37.30 to 40 or a proper breakdown below the 36.13 to 24 initial support, the market would still be trading within a range and our short-term bias could continue to be neutral. Heading into the open, we have pre-market support at 36.35 to 44.5, and a breakdown below that zone would be a sign of weakness, which could bring the initial support into play where buyers could still defend, and we would need to see excess weakness and big and sustained downside momentum in order to get a proper breakdown below initial support, and a break and hold below initial support would serve as a bearish confirmation. And if that breakdown is going to sustain, then we want to see the 35.95 to 36.02 zone taken out as well. And because the market has now balanced for a couple of days ahead of 35.95 to 36.02, that area has lost a bit of its strength. It's still a good area of support, but if the market is breaking down on big downside momentum, then it doesn't necessarily need to hold, and a break and hold below 35.95 would serve as yet another bearish confirmation, and that can then lead to a test of the support areas below. Now, in order for the bearish scenario to come into play, we would need to see a proper breakdown below pre-market and initial support. On the upside, we have pre-market resistance at 36.69.5 to 77, and a breakout above that area would be an early sign of intraday strength, which could bring 36.88 and the initial resistance zone at 36.93.75 to 37.03.75 into play. That is a spot where sellers can be active on first test, but because our short-term bias is neutral, we are going to have to assess the real-time situation. If the market ends up balancing ahead of that zone, or if the market is in breakout mode and heading higher on big and sustained upside momentum, then keep in mind that initial resistance is kind of in the middle of the recent range, and it's not a major area of resistance, and it can get taken out. And if anything, the 37.09 to 19 area is a stronger and better area of resistance where sellers are more likely to be active on first test, and we would need to see broad market strength and sustained upside momentum in order to get a breakout above 37.09 to 37.19, and a breakout above that area would be an intraday bullish indication, and from there ES can test 37.23.5, and then we have the bias confirming zone at 37.30 to 40, where again sellers can be active, and we would need to see signs of initiative buying in order to get a successful breakout above 37.30 to 40. So that is the market context and plan heading into the open. Again, our short-term bias is neutral. It's the last day of the quarter, and for those reasons, we are going to be extra selective and careful on the trade setups that we consider taking today. So that is the plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the pre-market and initial support, as well as the pre-market and initial resistance zone. That's going to provide an early indication as to which side is in control, and we'll take it from there.